Please welcome Allan Behrens.
Thanks. Cheers. Thanks very much, Joel. Well, I'm the light-hearted entertainment before drinks, which is the worst place to speak, actually. So I'm going to try and make this really short, hopefully sometimes sweet, but probably not. The only certainties in life are, actually I'm going to talk a little bit about just some observations about what's happening around the world. Brad asked me to do this as a bit of a party piece sometimes. Delighted to help out and just give a view of some of the things that we see happening outside of the US in particular. When I talk about some of the only things, the only certainties in life, actually this is a quote. Did anybody know the ending of this quote? No, it was very un-PC actually. We were very un-PC. I'm dressed down, I've got my shirt untucked, which is unusual for me. Actually the answer is, the only certainties in life are birth, death and nurses. So we'll move on. We'll move on, and for those of you who don't know us, right, because I've seen some new people, I thought I'd just put in a couple of slides just to explain who we are. We're an analyst and consulting company based in Cambridge. Our name, Cambashi, which I just stopped Joel in time, thank you, because it would have ruined my slide, is actually based on the fact that Cambridge its name stems from the bridge over the River Cam, and Japanese for bridge is Bashi. And our founder, Mike Evans, was working in Japan. He came back to the UK, so we're called Cambashi. Okay, nice little play on words. Cambridge, I suppose that most of you know about Cambridge. We're the English equivalent of, I suppose, Harvard or Yale. Lovely place, and of course we're very famous for punting. Anybody been punting here? Yeah, great fun, isn't it? And in fact, because of our skills in punting, we're very good at swimming. All right? So, I suppose here's my get-out clause, lies, damn lies, and statistics. You know, one of the things, and we'll come at the end of my presentation, I'm just going to share with you some of our views on what's happening in the market, some of the challenges, and perhaps some lights at the end of the tunnel. But you know, we have to remember that these are lies, damn lies, and statistics. And to that point, actually, there's a very interesting couple of quotes which I picked up some time ago. The DTI, obviously, is the UK Trade and Industry Directorate, talk about statistics being, you know, linked to R&D expenditure. I found a directly opposing quote from Booz Allen Hamilton, talking about them being indirectly not related. So anyway, going on. So what's changing? Well, we all know that there's hard times afoot. I think everybody has been affected. Some people, interestingly enough, have been positively affected, and good luck to them. I think that's great that there's still some companies actually doing very well in the current environment. I've talked to a few today. All is not doom and gloom, albeit these are challenging times. So we need to look at what other opportunities are there, and where should we focus our efforts. Specifically, as we're primarily software and hardware vendors, we're certainly all in the IT business, we need to look at what we can do better, look at opportunities, look at situations, and look at where we can add value to customers. 2 years ago, I would have used this slide as a preliminary slide on what's happening in the world and what are some of the major drivers. And this has now really changed. It's changed to many other things, including those. And these changes really have affected us greatly. And the way I look at it, and the way I've certainly heard you know, manufacturers and organizations, you know, building buildings or making new plants talk about it, is everybody now who's in the business is now really focused on, if it works, responsiveness, right? And what they're really interested in is, we know things are changing, we're not quite sure how they're going to end up, we have positive expectations, but really we need to focus on our customers, because that's how we're going to come through it. So, you know, with that as the lead-in, what I'd like to really talk about is just some of the things that are changing what our customers are doing, and some of the things that they're some of the trends that are active in the world, in different parts of the world. And one of the ones that certainly I look at when we think about, so what's happening, is energy consumption. And energy consumption is directly related to obviously power usage and things like car usage. And of course we know that the non-OECD, i.e. the emerging countries, are consuming power at an ever greater rate. And obviously it's indicative, and future predictions are indicative of the growth in the manufacturing and consumer sectors within the non-OECD countries. What's probably more interesting is how some countries are using it, as the demand is just outstripping anything else. So China is a classic example. It's becoming the manufacturing, or it is the manufacturing hub of the world now, is going to far outstrip everybody, including India. What's really interesting is, so where's that power going to come from? And something which was quite interesting when I was putting this chart together was, well, it's not going to come from green, it's not going to come from nuclear, it's going to come from coal. A lot of it's going to come from coal. There are huge coal deposits, specifically in China. And as China is going to be one of the greatest producers, that's going to be one of the areas that's going to be an interesting development, certainly on some of their power generating plants. There are, you know, one of the things I think we're looking at, certainly in Europe, to overcome some of the challenges that exist with some of the existing power sources, is trying to re-implement or redeploy nuclear very quickly to reduce the reliance on things like Russia, for instance, for gas, okay, which is causing some significant problems, as you probably know. I think the other thing is, if you look at vehicles, and we all know that the automotive industry really is suffering big time at the moment, there are areas where the automotive industry is still growing. And of course, you know, China, Chinese people using cars, the Indians, there's a huge home demand for vehicles, and albeit we see a significant drop-off in the Western European nations, in America, we see a rapid rise in consumption of vehicles in China and India. And I'm sure most of you, or all of you, will probably know the Tata Nano. Everybody know about it? Yep. You know, that is just something that's focused for that market. Very, very similarly, you look at what Nokia is doing for things like the Indians. They're producing different phones for those communities. And again, it's a sign of an opportunity. Albeit that this is an old prediction of the growth of vehicles, I think the trends might not be at the same rate, but the basic principle of this growth of specific types of opportunities, including vehicles, in emerging countries is something that we shouldn't really forget. This is a current recession, but the world will carry on, and growth will resume at some point in time. We'll come on to that, you know, just when will it resume. Demographics, another thing that's changing, and I mean, I used a very similar slide a few years ago. This is updated with 2008 data, is the changing nature of the countries in which we trade. And in particular, one that looks at Japan, which is the top curve. This chart shows the percentage of the population that will be over 60 in any particular year. Okay, now what happens when you're 60 or 65? You tend to retire. Well, that's what we used to think anyway when we had pensions. But what is happening is a change of the nature of the working population. And it's something which certainly troubles Japan. I know that, because as people retire, you lose the intellectual property and the knowledge that those people have got. And that's something, again, that we must think of when we look at supplying technologies to certain countries that may be different to others. I mean, we certainly have seen a greater take-up in research on knowledge capture in Japan than in certain other countries. Population growth. Well, you know, I mean, it's no surprise that obviously India and China are amongst the largest population centers of the world. But if you think about 20 or 30 years' time, actually what's going to happen is you'll see Africa overtaking them. Okay, now I was born in Central Africa. A lot of people know that. This is an interesting chart because it shows that potentially what is happening now in Asia might happen in Africa in terms of low-cost labor. I mean, in fact, I remember a VW plant was slated for build in Angola, but they withdrew it at the last minute because of local situations. But certainly people are considering Africa as an alternate environment to Asia. And in fact, in Asia, there is a new Asia. So Vietnam is the new China. You know, it's cheaper, skilled people, good opportunities, reasonably stable government, or very stable government now. So, you know, situations change, and I think, again, it's something to bear in mind. This is a different chart on the same sort of thing, but it gives this interesting view of, so where exactly are going to be the population centers of the world? And those population centers, remember, are potential market opportunities for the companies that we provide software to and hardware to. Okay, what about inward investment or outward investment, so FDI flows? Well, we've seen a significant drop-off in investment in the markets. It's not surprising, you know, when money becomes short, the last thing you want to do is give it to somebody else. You're going to use it yourself. You're going to store away your cash. And this affects many people, but in particular it affects emerging countries. Eastern Europe has suffered very significantly recently, specifically over the last year and 6 months, on the reduction on FDI inflows, and we're noticing some very short-term significant pain in those sort of environments. Not only that, but they've suffered many other types of upheavals, specifically with the Russian gas crisis. When that happened, I mean, I was speaking to somebody in one of the Eastern Bloc nations, and they were rationing they were rationing gas to business, not households, because it was midwinter when it happened. So they had to keep people warm, otherwise they'd die. So they stopped it to businesses. All the businesses just stopped dead, you know, during the week for about, I think it was a week. Right? Enormous damage to the national economies of these small countries. So, you know, these sort of situations really do cause challenges. You know, in normal times, you know, but what people actually look at when you look at these emerging economies is, so okay, we've got some money, we're going to invest it somewhere. Where best do we invest it? And a very interesting study from The Economist shows some of the reasons that people invest. And it's not really surprising that they're looking for places that are secure, that they can get their money out. And if you look at places like Russia as a good example, people are not that confident that Russia is a safe place to continue investing because of what they've done recently. It's a higher risk than originally had been thought. So they're looking at, well, where can we invest our money? Because people will continue to invest. They will increase their investments. And you know, what sort of ranking do we put on the priorities of these countries? But I think one of the things that certainly we've noticed is that government has a lot to do with it. The openness of the economy, you know, the honesty of the people, the crime rates, things like that. And you know, this entrepreneurial culture that certainly you have here in the US, which is unique, I think. It's much greater an environment than we certainly have in Europe. We're much more regulated in certain ways, certainly in our thoughts about investment in riskier businesses. And what they don't have yet, and what they are still struggling with, certainly in places like India, are the sort of areas of infrastructure which enable the sort of development that we expect to see. It isn't there yet. India is well behind China. China is really putting a lot of money into some of the infrastructure projects they've got. And a lot of the regulatory systems that we take for granted are just not there in these emerging economies. The other thing that certainly we see is as the populations become more affluent, obviously they have more money to spend, but what we are seeing now and what there are signs of in the world is a shift from the urban to rural in terms of the affluence of the communities, which is something that's a recent development, and this is a prediction from a number of sources, that it's not just the urban areas, which we all thought 2 years ago, that are going to have the money to spend on goods and products and services. It's also got some of these big rural areas. These are huge countries, and that's where most of the people live, right? So 2 years ago, I would have told you there's this huge move towards urbanization. I'm not convinced that that's the case anymore. What about globalization? Well, there's a lot of, and there has been a lot of talk about where we do our business, where we offshore, which countries are the ones that we offshore most to, and a lot of statistics on that. But interestingly enough, and this hasn't changed that much, we actually offshore a lot more in Europe than you do here in the US. In particular, this is companies without any home-based manufacturing. So we're much more used to it in Europe than you are in the US. But what about the satisfaction? And this is a very interesting study. I've been tracking this for a few years now, which is the satisfaction level of companies in whether or not they should offshore or nearshore. Nearshore, everybody understand the terminology nearshore? Right, offshoring is in the US, if you give something to China to manufacture, that's called offshoring. Right, in Europe, we have Eastern Europe, which is next door, next country, that's called nearshoring. Okay, to a European country, that is. So the satisfaction levels are very low on offshoring. They are declining slowly. I certainly noticed this a few years ago. I was giving a presentation here in the US, speaking to one of your major first-tier automotive manufacturers. And even at that time, they were looking at bringing business back to the US because of their lack of satisfaction of the quality, the speed, the responsiveness. And in fact, I've heard this from so many other places. I'm not saying it's going to happen in a huge way, but certainly we're seeing it as a current trend of people reshoring their businesses because of this lack of confidence and capability that exists outside. There's obviously a lot of national feeling within companies. I mean, we noticed Intel a month or two ago announcing a £7 billion investment in new facilities here in the US, moving facilities around in China, closing some down and consolidating them. So we do see a trend towards a lot of re-energization of local capacity. And, you know, it helps in timescales. I was speaking to a design company just the other day, and they were talking about the fact that it takes them probably 6 weeks to turn around a new design to China, and they can do it within 2 weeks in their home country. And it might cost them a bit more, but in the scheme of things, it didn't matter. You know, so I think people have really got to grips with how much does it really cost me. In current market conditions, rapid change is more important than saving a few pence by sending it out to China. Having said that, right, I mean, we do believe, certainly at Cambashi, that you can't do everything yourself, okay? And in order to continuously innovate, one does need to involve partners, and those partners may not necessarily be local. There are other skills in other countries, in other companies. So we do believe that there are opportunities outside. The other thing that we're seeing is certain changes in the business models. In the same way that, you know, you see service-oriented models such as cloud computing and cloud technologies emerging again, okay? They were called something else last year and something else the year before, but now they're called cloud. We see the same thing happening certainly for manufacturing, and this is no new thing. They've just got some different names. I'm assuming most people have heard of Power by the Hour, which is a product from companies like Rolls-Royce, where they sell you the engine power and usage by the hour. They maintain it, they run it for you, and you don't buy the engine outright, you buy a service contract. Same thing's happening in many other areas, including what's now called chemical leasing, which is a program all around the world actually now. You should have a look at it on the web. Just do a Google search for chemical leasing. Very interesting. There's even a video showing what it should be and what it is. But this is effectively, if anybody's heard of the BASF factory in BMW, where they paint the car for BMW, and BMW pays for a painted car, as opposed to buying a facility and then buying them the paint. They buy the service. And it's very efficient, and it's extremely efficient, in fact, because not only is it efficient for BMW, because they get a higher quality vehicle, right, but actually it's down to BASF, who supply the paint, to make sure that it's of high quality, and they continue to make a profit. So both sides are motivated to develop a better product and a better solution for the end user. Actually, at the end of the day, it's always for the end user. Of course, and we'll hear a lot of this over the next couple of days, there's always a focus on social responsibility. Certainly we believe in Europe, and we're very big-headed about it, that we're well ahead of everybody else. I'm sure it's not true in all cases, but we certainly have more regulations. And this causes a lot of problems as well as solves them, because especially at the moment, do I really believe in my heart of hearts that Volkswagen is going to get sued by the EU for lack of compliance to end-of-life vehicle regulation? Well, I'm not convinced it'll happen, because it'll take Volkswagen down. So I think the regulations are there. Current climates will restrict some of the penalties, but in essence they will continue. And Europe is very strict about certain regulations. I think and it's an opportunity for many companies in managing, tracking it, making it easier to develop with the increased complexities of all these regulatory compliance issues. So, going back to turmoil, what we're going to do is just have a very brief view of some of the numbers. Many of you know we track markets, we measure them, as do a lot of the other analysts. But the way that we do it, one of the ways that we do it is we look at industries. And I'll just give you some views, industries and countries, just give you some views of some of the country information we've come up with. If you look at our growth views past and into the future, I think something that's interesting, if you look at some of the larger countries, I don't know if you can see sorry about the size of the text, far right is US, next to it is Japan, top is China, bottom is UK, furthest left is Germany. This was our view of the growth of these regions in terms of end user expenditure in dollars, right, by country, okay, for what we call technical applications. So that's mechanical, civil, structural, geospatial technologies. If you look at our view of 2008 to 2009, if you look at the UK, right, that is at minus 30%. Right? We believe that the UK is probably the hardest, well, it is definitely the hardest hit of all the countries in the developed economies. And we're certainly seeing that now in terms of its GDP. How about next year? What's really interesting here is the sort of compression of the spread is reduced, but and obviously a reduction in the decrease, but still a decrease. Okay. Looking forward, however, we do see an increase in the growth coming between 2010 and 2011. We see an increase. We see a growth back into the positive growth, and a significant growth as well. So something that really reflect itself in the revenues of a lot of the companies that we deal with. I think if you look at the Asia-Pacific areas, although we see a drop, it's still, our view is it's still going to remain positive, significantly positive. Okay. One of the reasons for that is not just the fact that they are significant exporters, because obviously exports have dropped as well, is this bit about the change from supplying to external markets to supplying to internal. And if you look at countries like China, they have a lot of efforts going on to try and actually divert some of the manufacturing from export to supplying internally. Okay, so that's a significant trend in places like China. Now this is in dollars. If you look to that in euros, right, because I think something that you've got to bear in mind is, the eye of the beholder, right? You're here in the US, you look at everything in dollars. If we look at it from the European side, right, as Europeans, it's a very different picture, right, because of the exchange rate fluctuations. But what's really useful is to look at it in local currencies, because the sales forces that you've got, right, so the end user, the IT companies here have got, look at it in local currencies. That's really what's important. And that's what we actually measure. We measure in local currency and do conversions out. As a sort of parting view, just to show you what we believe is happening in the US and the rebound that we see that is coming. And again, this is a statistical measure. We review it quarterly, so we update it quarterly. But we do see that you have a very significant increase coming. Our numbers are not, we have different views of the world, whether it be a view on GDP, obviously, which is a view that comes from external sources, as opposed to the investment growth, which is the end user expenditure in dollars, as opposed to the engineering applications, i.e. the revenues that companies like yourselves produce. Opportunities and challenges, just going back, in summary, just talking about a couple of the things that I mentioned earlier. Firstly, there are geographic situations which will change the nature of what people do. Good examples are bird flu. When bird flu hits, what happened to the silicon market, the memory markets? Completely changed a lot of people's outlooks on where to position manufacturing, how to source, etc. And that's what happened when Russia cut off the oil to the Ukraine. It changed people's view on some of the priorities, and these are priorities that really require significant investments. Sales and distribution, I mean, we certainly see turmoil in a number of the channels for software suppliers and hardware suppliers in the market. A lot of consolidation because of the short-term nature of the cash that a lot of channel partners have a view of. We see a lot of vertical market opportunities, areas which are good opportunities for yourselves and for software and hardware vendors, but you've got to be specific. They are not global opportunities, they are country opportunities. So you have to look at what the local situation is, what they're good at, where their strengths are, who's investing where. I mean, I heard today about the rail market. You've got some significant investments coming online in the US for high-speed train. And again, these things are happening all around the world, and you get specific investments in specific countries that are good opportunities for you. But we do believe that there are these global markets. There are good global markets that are still growing. Biotech, opportunities around certain types of energy, certainly in Europe on a global level. The UK has already committed, albeit we're waiting to see when they start spending on it, £100 billion on renewable sources over the next few years. So as that starts to come on stream, we'll see some benefits go out to, hopefully, UK companies. But I'm not sure. People like Vestas have got a pretty large stake in that, and they're not UK-based. So there you go. That's a very quick view of other things apart from what's happening over here in the US. I hope it was interesting. Appreciate your time. If there are any questions. The question was, of the decrease of the revenues of the companies that are in the applications market, how much of that is ASP based and how much of it is customer purchasing? The predominance of it is purchasing. There is an element of ASP reducing. To be fair, our models are probably reasonably accurate for about 2 years. Certainly this year is reasonably accurate. Next year is less accurate. 3 years out is pure econometric, because I don't think anybody can predict more than about 2 years out with any certainty. and especially in current conditions, because we use the phrase "all bets are off." But there is certainly a small element of price erosion, but there's also new products going to come in as well. So we see a change of the landscape as not just being price erosion, but also new product entries.
Allan,
Yeah.
I was surprised by your statistics on population growth expectations in Africa.
Yep.
Because of the AIDS crisis now, I mean, I know people on the street, several countries in Africa, all I ever hear about is staggering death rates.
Yep.
How do you come to those numbers?
They're actually from the UN. So I think they, obviously I can't take any credit for them, but they're actually not that far off other information from things like places like the World Bank. So they're all pretty similar. AIDS is a big problem. I mean, I mentioned before, I come from Central Africa. Zambia at one point had a declining population, but it's growing again. AIDS has been slowed down. I think the recognition of it in South Africa has changed, certainly that part of the continent, but it will, one of the expectations I would expect, again I can't speak for them, but I would expect that there would be an expectation that AIDS is, if not curable, is manageable.
So that expectation is being factored into this?
I can't answer for that, but that is certainly something that I could imagine is practical, yeah. Sorry, I think the question, if I got it right, what are the parts of the model that drive such a strong rebound in the USA? Actually, our belief is that there'll be a strong rebound everywhere. If I just go back, well, I mean, one of the things is that there's a natural pent-up demand for capital expenditure that will certainly be part of that rebound. I mean, currently people are not spending. I mean, Brad's statistics are quite interesting, actually, because they sort of endorse some of the views that we've got of the market, that there will be significant cutbacks, but at some point the market will have to release, and there will always be companies that will invest, but what will happen is you pull out of such a deep recession as we're in at the moment, a lot of companies will have a lot of cash to spare, and they will want to beat their competitors. And there'll be a race. I mean, one of the views that we've got is that there will be a significant increase in expenditure to try and beat the competition. Yeah, I mean, I'm not convinced that the latter actually holds true at the moment, because there's no... one has to wait for the capital to start flowing through the businesses. So preempting GM's increase in spend is probably not what companies are going to do at the moment. I think it would be at the macro level. So primarily at the macro level. Absolutely. Again, these are our view of the market. I mean, other people have got different views, but they certainly are. We found them to be reasonably good. I mean, they have been proved accurate, albeit that we have to update them very often now. I mean, that's one of the challenges that we have as economists and statisticians, is that whereas before we could take an annual view, you can't take an annual view at the moment. You've got to take a quarterly view on the changes. Okay, the horizontal axis on the bubble chart was purely the countries, right? So each point was a different country. I had to separate them somehow. There was no value attributed. Underneath Germany. No, you can see the bottom of the bubble just underneath Germany, funnily enough. So I hope that was different and interesting. I appreciate your time. And the bar is probably going to be open in half an hour. Thank you.